Have you ever pondered the workings of the stock market? A realm often seen as complex and intimidating, it's actually a dynamic system that's more accessible than you might think. So buckle up as we delve into the fascinating world of stocks, trades, and exchanges. Imagine a bustling marketplace. This is what a stock market essentially is, a platform where buyers and sellers come together to trade. But instead of fruits or vegetables, they're trading shares of publicly listed companies. You might be wondering, what does publicly listed mean? Well, when a company decides to go public, it offers shares of its ownership to the public through a process known as an initial public offering, or IPO for short. This is how companies raise money for growth and expansion. And just like that, a slice of the company is up for grabs for anyone who's interested. These pieces of the company, also known as shares or stocks, are then bought and sold on stock exchanges. Some of the most famous ones include the New York Stock Exchange and Nasdaq, but there are many others around the world. Now, here's where things get interesting. The prices of these stocks don't stay the same. They fluctuate, much like the prices of items in a regular marketplace. And these fluctuations are influenced by a variety of factors. Firstly, supply and demand play a crucial role. If more people want a particular stock, its price goes up. If less people want it, the price goes down. Secondly, the performance of the company also matters. If a company is doing well, its stock price usually rises. If it's not doing so well, the price might fall. Thirdly, broader economic factors can also impact stock prices. Things like inflation, interest rates, and political stability can all play a part. Lastly, investor sentiment, that's the overall mood or feeling of investors towards the market, can sway stock prices. If investors are confident, they buy more, pushing prices up. If they're fearful, they sell, causing prices to drop. The ultimate goal for investors: buy low and sell high. By doing so, they aim to profit from these price movements. So, to sum things up, the stock market is a platform where shares of publicly listed companies are traded. Companies go public through IPOs, and investors buy and sell these shares on stock exchanges. Stock prices fluctuate based on supply and demand, company performance, economic factors, and investor sentiment. It's a complex system, but at its core, it's all about buying low and selling high. And there you have it, the stock market, demystified. While it may seem like a game of numbers and charts, remember that it's ultimately about companies and their stories. So whether you're an aspiring investor or just a curious mind, remember this: the stock market is not just for the suits on Wall Street. It's for anyone willing to learn and take part.